Hello traders, hello everyone. Welcome to our new webinar on the important FOMC day. So, how is doing everyone? Is everything okay? Hello Nick, hello Johnny. So you're watching this either on YouTube, hello, and you're either watching this on YouTube or maybe on TradingView. So on YouTube, looks like everything is set up. Hey Vladimir, how are you? Everything is fine. On TradingView, it looks like that we are live there as well. By the way, if anyone is watching this on Twitch as well, so if you are using this platform, we are also streaming there. In the future, we are also obviously planning to stream to some of the other social medias as well. So Nick, everything seems okay on YouTube. So Oleg, hey, how are you? Happy Feds Day? Yes. Or maybe you just, an important day like this, a lot of traders, investors are just observing the price action and want to ignore this noise and just because that this is where it is going to be a very tough session for sure. So if you don't have your trading plan already playing out, then maybe just better to wait on these events to pass, and then when the price action a little bit will stabilize, slow down, that's when again you could be looking for potential new opportunities because markets will be here tomorrow as well. Okay, so if you're watching this webinar for the first time, or even if you are with us each week, please make sure to subscribe to our channel, to like the video, to leave us a commentary, and with this approach you will obviously support our work. So I will make sure to to make more of those webinars in the future. So US CPI data yesterday came to 4% from 4.7%, if I'm not mistaken. On the last report, expectation was 4.1. So what we are seeing, obviously, stocks are moving sharply to the upside. It looks like that investors are confident and believe that sooner or later Fed is going to stop the hiking cycle. Now the question is if really are going to stop, or maybe just skip, or maybe who knows, what if they will surprise, like Bank of Australia, Bank of New Zealand, Bank of Canada, every bank over the last and every bank of those over the last few weeks were planned to be on hold, but then surprised and actually hiked more than expected. However, even if somehow, let's say that they will be dovish, okay, or maybe just not really dovish, just on hold, and we'll also highlight this in the press conference. Maybe stocks will not move that easily to the upside because it can be buy the rumor, sell the news impact. Because everyone were buying stocks over the last 2 weeks because we have seen a very nice push higher going into the Fed. So even if they will be on hold, there can still be some setbacks, okay, unexpected. If they will surprise and be hawkish, then we know that stocks could see a very strong pullback. So no matter how I look at it, I'm very careful at these levels. I know that some short-term setbacks can occur before we can potentially see much more upside. Now, if we look firstly on the US dollar index before we go to some of the other markets, as you know, I will cover a lot of important markets here. So dollar index, just let me grab some water. Okay, so dollar index here still in a corrective phase, in my opinion, since February. Okay, so we know that sooner or later, not know, but assume that sooner or later this correction will come to an end. So I'm still looking for a potential flat correction here. So ideal resistance would be around 105 to 106. Now currently we are seeing some dollar weakness because CPI yesterday and PPI today are coming lower than expected. So PPI figures is another reason why maybe Fed could potentially be on hold, but we will see because a lot will depend on the press conference. So from an Elliott wave perspective, still we could be looking for a little bit of more upside for the final push to complete the higher degree wave C. So wave C here is a motive wave. Now that's still very nice support, 30-50% retracement. You're here at the one smaller forward wave 4 here around these levels. So it's a very tough situation here ahead of the Fed, but I'm sure that we will get an answer later today. So we either will see a bounce to the upside, then I think that euro, which is very weak, could see much more weakness. So regarding the potential dollar strength, I will still stick with euro dollar weakness and dollar yen strength. Now, if suddenly, let's say, today dollar index will just continue to the downside, maybe even overlap this 102.25, then we know that most likely dollar weakness will even resume towards the end of the week. And in such case, I would focus on very strong commodity currencies like CAD, NOK, and ASI. I have been talking about this already last week. Okay, so here, as I said, still potentially wave for maybe final push higher still can be in the cards, but this is more like a link to the euro dollar because we know that dollar index has most of the weight from the euro. Okay, now if we take a look on the US yields, now the bigger picture still shows that we could be consolidating here for a wave B, potential resistance not far away. Of course, when this weakness will start to unfold, that's when dollar index would also most likely come to the downside. So this is a long process. We are still in the middle of this consolidation, so not really easy to follow any kind or predict any kind of bearish impulses going forward because we are not seeing any kind of a breakouts. Okay, but whenever this potential triangle wave B will come to an end, that's when I will be willing to look for a sharp drop into the wave C, and then obviously dollar index will be much lower. So here is euro dollar, maybe better to show here what I was looking at for the last few months. I've been tracking this very nice impulsive recovery followed by sideways price action. So this is a pretty normal activity. I mean, that was a very strong move. So clearly consolidation is something that we normally expect, and sometimes can be very simple, sometimes can be very tricky, very complex. And this one appears to be a complex because it's a flat, because we have seen a break to a new high, didn't hold here. We came back to the middle of this 2023 range, and there is still actually a chance that we'll retest the lower prices, or maybe this will even transform into some kind of a triangle. In either case, I think that move from January highs from start of the year is a correction with an uptrend, and that this recovery will resume. You can see here I have this basic technical chart, so how it's pointed where we are positioned at the moment. I think that we are in the late stages of this corrective pullback. So I think that later this year, euro, ASI, NOK, all of those currencies could be trading much higher. Tomorrow we have also the ECB, so ECB is expected to raise, but again, I mean, the most important whenever you are waiting on this central bank policy decision is what will be the message that for potential decision on the next meeting, because during this period traders, investors will try to position themselves going into the new month. So that's something that we should pay attention on. It doesn't necessarily mean that market will react as it should based on the current decision. The most important is what's the message during the press conference for the next few months. Okay, decisions. Okay, so euro dollar still at a potential resistance here. Whoops. Okay, so here we are in this wave 4, 38.2%. We have some swing lows here that can act as a potential resistance here, and also former wave 4, that's also wave 4 distance equals to wave 2 around there. So it's a pretty nice, very ideal technical levels. Of course, during important events like this one, those even these patterns can get invalidated. So you have to be very careful, very nimble, and make sure you don't have a lot of risk here during these events. You can always take some risk off and maybe put back after the price action will settle down after the event. Okay, so from an Elliott wave perspective, fifth wave still here is missing. Potential invalidation level is here at 109.42, but even if we see 109 already broken, and let's say that after the press conference today price will on the euro will stick around 109 level, then in my opinion this will most likely suggest that we either completed correction here, or maybe that's still going to be a very big triangle. Okay, so I think that today's price action will tell us a lot. But looking at this, some maybe closer look here. I'm not sure if you're intraday trader, maybe this could be important for you. So that's definitely technical resistance here, and this could be potential very small wedge here at the top. So also we are just 20 minutes ahead of the US cash open, and keep in mind that the opening barrels of the sessions are important, the same as potential support or resistance levels. Okay, support or resistance levels mark potential limited moves based on price. But when it comes to sessions, that's potential resistance or support or a new swing coming to the market based on time. Okay, because during this period you will see that flows can potentially change. Okay, so for now I just would not trust this move just yet. I think that there can be some setbacks coming, even if just temporary here at the start of the session, of the US session. Now, if we break, let's say 107.30, then I think that this weakness will just starting to accelerate, in my opinion. But of course, daily closest price is the most important price of the day, so keep an eye on this one for sure. Now, let's take a look on. We covered this on. We set on Aussie dollar. Okay, so Aussie is one of the strongest for the last 2 weeks since start of the month. It's one of the strongest actually since RBR rate decision, who surprised. We also have seen surprise from back of New Zealand. So even New Zealand dollar is now trying to recover. So it looks like that commodity currencies are trying to pick up the momentum in line with stocks. Now looking and with a delay. But looking still at this chart, we have been tracking these 5 waves up back in 2022, and then since start of this year we've been observing this counter trend movement, and so far we very nicely see our bounce away from the 61 78.6% fips. More importantly, we are breaking this trend line. So I think that more upside is in the cards here, but again, buying here, if you are intraday, even maybe swing trader, buying here may not be the best place to do it because you're still technically at resistance. Okay, so that's still very strong resistance ahead of the Fed. So maybe if you want to join the trend here, you definitely should wait on a pullback first. Okay, that's something that I will also look for potential entries if we'll get this pullback with members. So very nice support if we look on the 4-hour chart. The first one would be at 66.75, but if we break this one, okay, then obviously I would pay attention most likely to the 38.2%. Whenever we get this pullback, the 38.2% would be my first potential support, because the 38.2% is something that I observe whenever I'm tracking wave 2 or wave B retracement. So this would be my first support. So either this can be from current levels, okay, if we assume, then this would be a support around 66.75. If we go even higher, then 38.2% will move higher as well. So definitely these are the fips that I will track whenever we step into this correction. Now for now, we are still not in the corrective movement, but as I said, we are at the potential resistance. There can be some position adjustment ahead of the event today, so maybe we'll see some failure breakout. I'm also sure that there are plenty of stops here placed above that level, so clearly spike and a reversal is possible. Hey Wonka, how are you? So someone has joined us on TradingView. Hey here. Okay, so Aussie bullish, very strong. More upside can come, but it's a little bit too early for potential. Too late for potential longs, in my opinion. You are at the potential resistance. Now let's take a look. Did we cover Bitcoin? No, we did not yet. Okay, so what I have left here on the list, let me take a look on dollar NOK. Okay, why I'm bringing on dollar NOK is because we are seeing a pretty nice reversal there going on as well. So this is dollar NOK, and you can see that actually I'm counting this as an impulsive fashion. So yes, it's a bullish trend, but even 5-wave movement, okay, can see a 3-wave setback. And I think that this corrective pose in 3 waves, okay, can already be underway. So I think that we will see more weakness here on dollar NOK. I really like the price action so far, and notice that we are currently at this Elliott wave channel support. So maybe some chopping around on the intraday basis could occur here, but looking at the 4-hour time frame, we are seeing a pretty nice sell-off, right? So that's still for now. That's still for now a 3-wave movement to the downside, right? Here, but you have the extended leg here, okay? So normally when that happens, you can assume that maybe that's wave 3 of a 5-wave impulse, okay, so that structure, rather than extended wave C of a corrective price action, who will see reversal back to bullish mode. Of course, that's possible, but you always, when you're looking at the markets, when you're trying to apply the wave count, try to focus on probabilities rather than possibilities. So there's a greater probability that this current drop will unfold as an impulse because of an extended wave 3 rather than a corrective movement. Also, another thing that is important is that you have here the base channel, right? What is the base channel? It's the channel where you connect the starting point of wave 1, right? That's here, the ending point of wave 2, and then we put the parallel line at the bottom of wave 1. And when this lower trend line is broken, like this one, it normally confirms the scenario that we are in an extended wave, and usually that this then represents wave 3 as I discussed. Okay, if this same line will hold as a support and you will see a recovery, then this same line would mark the end of a wave C of a corrective pullback from the highs. Okay, so clearly, because we are broken this trend line, just another confirmation that most likely we are trading impulsively here to the downside. Also, I like the fact that we have seen a failure break here at the new high here, and didn't stayed long for any long time here above 11. So I think that that's a pretty nice strong reversal, meaning more weakness here could be in the card. So based on the Elliott wave principle, based on this failure break to the upside, based on sharp reversal that we are seeing now, based on potential, who knows, maybe dovish Fed today, I think the dollar NOK has a very good downside potential. But not only this, we have also crude oil that we have to keep an eye on. So here at the bottom, okay, I have the overlay chart between dollar NOK and crude oil. Okay, so here you have, in blue, you have dollar NOK. You can see a very nice move to the downside, right? And notice that since for the last week or so, we have also seen crude oil moving to the downside, which is in orange. And what has happened recently is crude oil made a failure break here and stabilized around $67 per barrel. And now we are seeing even a reversal to the upside. So with crude oil being at the support, even turning to the upside, I think the dollar NOK has much greater chance to stay in downtrend, because it's been in downtrend already when dollar NOK has been when crude oil has been trading to the downside, because higher crude oil equals to lower dollar NOK, because NOK and crude oil are in positive correlation. Okay, so now with that being said, let's take a look on the crude oil. I hope that's not too complicated. I'm trying to be simple as possible. So here on crude oil, I must admit that it was a pretty tough price action over the last few weeks. Okay, and clearly that's visible with these big swings that occurred in both sides, and probably cleared a lot of stops from the bulls and bears. But notice that earlier today on the morning, when I usually update charts for our members, notice that I came out with an idea that maybe that's an expanding triangle. Okay, an expanding triangle is just the opposite of a regular normal triangle, but can also occur in a wave B. And so far I can count 5 subwaves. Okay, so actually since we are trapped in this range for a very long time, and because I can count already 5 subwaves A, B, C, D, and D, I think that maybe now finally we will see the real direction coming showing up. Also, it's the same thing with the normal triangle, okay, where you have this uh, type of a price action, and you see prices chopping around here, and everyone tried to catch the breakout, but then when suddenly they give up, that's when market breaks to the upside. So now maybe we have something similar here. After failure breakdown here, we are turning to the upside. Also, if we look a little bit closely here, I have the hourly time frame. This can be potentially even impulse here from that lows. Okay, so that appears to be like a very nice bullish reversal. More importantly, we also have seen a move above $69 per barrel. So this overlap, just it's another confirmation that drop from here is not impulsive, because waveform must not make an overlap. So in my opinion, we have a pretty nice evidence and strong case here for potential higher prices. But of course, as I said earlier, Fed is today. Just don't trust blindly your charts on this important day, because you just have to be open-minded. You know that everything can happen. Maybe our labelings are wrong. That's why you have to consider that market can always move in both sides. So I will keep an eye on this one for even for potential longs. If market will stay here around this level, around $70 or even higher, I will seek potential entries on pullback. Okay, but I want to see where the market will finish the end today. Okay, I just don't want to be too quick in this one. But definitely, I mean, someone will potentially already be on the long side, but which is fine as long you know how to control your risk. Probably you will not, ahead of important event, you will not risk the same percentage like when there are no major events like this, obviously. Okay, so I hope if someone can say confirm in chat box, was this clear regarding dollar NOK, crude oil? So that's how I try to read the charts. They're not always this kind of a intermarket analysis that I'm looking at with confidence, but so far, I mean, this dollar NOK, what I really like dollar NOK, I must say. Okay. Yes, as Wonka said, is saying on TradingView, it's expanding triangle, very rare. Yes, extremely rare. I don't like to label these kind of structures, to be honest. But if there is no any other better solution, then obviously, and if the wave count is valid, I will obviously go with it. I hope that makes sense. Okay, now let's take a look also on the S&P 500. I mean, we will also look at nasdaq and Dow Jones as well. So the S&P 500 is making a pretty nice move to the upside. That's a higher degree time frame chart. I mean, still, it can be already maybe finishing this correction, or maybe a little bit more complex, who knows. But for now, we will try to focus here on this one. Okay, notice that we have a pretty nice move to the upside. We are breaking this major level here, but important is to know that we are currently ahead of an important event, ahead of the Fed. As I said, maybe already earlier, we have expectations that Fed will be on hold. Okay, but hold is not necessary, is not dovish. Okay, so stocks will see much more upside with the easier flows. If you will have dovish, it means that they will cut the rates. So even if they will hold, that doesn't mean it's dovish. However, the market could potentially hold the super, but you have to realize that a lot of these moves that we have seen over the last week or so came on speculations that Fed will really stay on hold. Okay, so now if they really confirm on hold, or maybe even say during the press conference, yes, we are done, we will not hike for the next few months during summer, blah blah blah. Still, it you can see a pullback because it will be buy the rumor, sell the news impact, because this what Fed confirmed, market already played out. Okay. The next thing is that if Fed will surprise, as I said earlier, like Bank of Australia, Bank of New Zealand, then you may see again a pullback because they will be hawkish. So immediately all of those gains could very quickly be erased. But still, there will be a support later on, in my opinion, after a pullback, because if they will surprise and hike, it means that they are closer to the ending of the hiking cycle. Okay, hope that makes sense, because as I said earlier, investors, speculators always do 1, 2, 3 months in front what Fed may do in the upcoming months. Okay, and keep in mind that inflation came down after all. So I still think that buying pullbacks on stocks makes sense. Just don't buy it here. Okay, that's my current approach. Looking at the VIX, we are trading here at these lows, at the extreme still. So market, it's a little bit too confident, I'm say, regarding the bullish call. But obviously, if we are in a new impulsive uptrend, that makes sense after all. Okay, still we have to respect what the market is doing, is rising, and of course after pullbacks we could see more upside. I will not deny that. If we look at here at nasdaq 100, also very nice, beautiful uptrend. If you recall, we first were looking for potential leading diagonal here, but now since market just stretched, extended to the upside, technology sector is doing well. I just think that we have this new impulsive cycle going on. I will not label these subwaves here because it can be obviously 1-2-1-2 scenario, but in either case, the important is that from here we are seeing a new impulse. Okay, and this impulse is still not finished. That was a wave 1. You had this wave 2 retracement, nice extended wave 3. Now going on, we are close to the 161.8%. So again, maybe if you want to ride this trend, just wait on the pullbacks. We have some gap here. Not sure if that's a real gap or no, but clearly, I mean, this is the zone that we would watch for. Also, market has been trading to the upside since start of the week, since Monday. Okay, and from a percentage, a probability perspective, well, there's a chance that there will be a new swing coming during the week. Okay, if we see Monday, Tuesday, Wednesday straight move to the upside, keep in mind that there can be Thursday reversals, Friday reversal coming. Okay, so yes, stocks are bullish, but just wait patiently on the next pullback if you want to join this trend. If you look here, Dow Jones, it has a slightly different structure here, but still the most important was two things. The first is that this was a correction. Well, not, I'm wrong. The first thing was here that this was an impulse. Then we got a correction that stopped at the 61.8. Then we got another minor impulse, broken this trend line. We came back to test this trend line a few times, unfolded another 3 wave drop, again at the 61.8%, and again we are coming higher. So that's a textbook example of the impulses or bullish trend in action. Okay, but notice that again we retested these highs, and this occurred with 5 waves. So again, will you buy here? Well, probably you want to see a pullback, or maybe even if we see extension to the upside, you will wait on a pullback later, and this current resistance will be support later on when it's broken. Okay, so again, yes, that's a bullish trend, but and should continue higher, even if there will be limited upside, should be at higher prices at some point this year. I think that we will pass this high here, which goes back to November of 2022. Okay, now let's take a look on DAX. Hey Marcus, how are you? Famous has joined us. Clear. Okay. So German DAX, very nice ongoing bullish trend. We are just trying to retest this all-time highs a few times. Obviously, these are important levels, not really easy to be broken. And looks like that we have a little bit of more upside here. But I am aware that we potentially could be running into this resistance, but still there is room for more gains because the latest price actions I will show you on the next slide. Let me just switch the colors here. So as I will show you on the next slide, is still incomplete. So this recovery is not finished yet. Okay. So here's this 4-hour time frame. I adjusted this one recently after this push to the upside. So here we are looking at this ongoing impulse. This drop can be labeled in 3 waves as a completed wave 4. More importantly, we stopped here at this very big level, and now we are just progressing to the upside. So if we are here in a wave 5, what you should see, 5 waves up, right? So for now, that's not the case yet. So it means that most likely we are going to see more upside here. If suddenly we broke this trend line support, then I think it can be the first evidence that we are stepping back into the consolidation phase, and then this wave 4 will be more complex, okay, but still part of a bullish trend. So I think that German DAX here could stay in uptrend after the next pullbacks. Now let me take a look also on Bitcoin. We covered crude oil, Leon, at the start. Hello, Asta. We won't see oil going up and natural gas going down. Well, natural gas has been plenty of time in different correlation, different magnitude of the move. So I will not say that it's impossible, but definitely it's important to know that normally all energies are trying to move in the same direction. But crude oil is different story. I mean, it has a lot to do with OPEC cuts and supply and demand, which depends on economic activity for sure. Now, here we have Bitcoin. Okay, so for our first wave count, I will show you 2 wave counts. Now, first wave count suggests that we are here in a 5-wave rise, and now we are in counter-trend movement. Why I'm looking at this to be a counter-trend movement is because of these overlaps. Also, there's a very nice technical support. So even if you hide here, you can clearly see very nice technical support around 25,000, right? So this could be seen, even some would read this as a potential bull flag unfolding. But for cryptos to move to the upside, what we have to see is dollar index back in a downtrend. In general, dollar should see much more weakness. Okay, at the same time, of course, stocks should stay in uptrend. But over the last 2 months or so, dollar index, as you know, has recovered quite nicely. And that's maybe one of the reasons why potential cryptos have seen move to the downside, and not to mention these issues with Binance. And we know that U.S. Securities and Exchange Commission is taking charge against Binance because they are not properly registered, because they offered some of the coins that are on their list. So definitely this is something that has an impact on cryptos in general. But normally this kind of events will occur in the bearish trend. And so far we have, even after this very bad news for cryptos in general, I mean, Bitcoin is still doing quite well. You would expect, I mean, that you would see prices on Bitcoin much lower, but that's not happening. So I still think that cryptos could potentially stabilize in the second half of this year, could potentially see more upside. Keep in mind that even since start of the year, we have seen a pretty aggressive run here or crypto. So this pose is still, I mean, pretty normal based on swing or how the markets breathe. Also, as I've been showing this in my video here on Monday, keep in mind that there were obviously a lot of exchange outflows from Binance, but that's not necessarily a bad thing. I mean, because if investors, private clients will keep their coins on a private wallet, then actually this means that there is a less chance that they will transfer or they will exchange it for fiat or some other cryptocurrency. okay, they will rather keep them on their private wallet to be safe. And if they keep them, hold them, that's very good for cryptos longer term. It occurred here, very similar situation back in March, and even here back in December and November, we have this exchange that outflows that increased, but still market later on recovered. So based on dollar index that I see it, there is a resistance based on still risk on environment, very nice overlapping price action here on Bitcoin. As I said, I still think that there can be very nice support not far away. Of course, from an Elliott, from a trading perspective, again, it really depends what kind of a style you have. If you are more short-term trader, you will potentially wait on this bottom to form first. Okay. Now, if you're more longer-term approach and you have a few percentage of your portfolio in cryptos, then of course this current dip is not really important, or it doesn't matter to you where and when this correction will complete itself. Now, if we look at the Ethereum, what I like so far on the Ethereum is, when looking at the intraday chart, is that we are coming down from that consolidation that was a triangle. Okay, so you can see it here. So whenever we see move coming out of a triangle, keep in mind that this is most likely, not necessarily, but in a lot of cases, is the final leg of the higher degree trend. So if that was a triangle, the higher degree trend is currently to the downside. So triangle occurs prior to the final move, so it means that this is now a final move. So I'm looking this to be wave C, could be potentially equal to wave A around 1600. So very nice support here. We have some consolidation going on, so clearly there is more weakness coming in my opinion. But I am aware of potential limited weakness once we approach these downward targets here around 1600. So for now, it's still a bearish trend, still in play. Cryptos are still bearish here on the short term, so just be aware of lower supports here. Now, from a bullish perspective, yes, I will be on the watch list for potential buying opportunities, but what I want to see is a very specific price action. I want to see this retest at these levels and then very strong unexpected rise, okay? And then obviously would hunt the pullbacks, okay? But for now, it's a little bit still early. I mean, some would potentially even look for shorts here within this strong downtrend because it's still in the cards, and could stay in the cards as long as we are trading below 1820, okay? Okay, traders, I hope that you enjoyed this video. Someone asked for forex pairs, please. We covered a few of them. I think you're our member, or I'm wrong. Anyway, we covered the FX pairs at the start of this webinar, so make sure to watch the recording. So again, guys, if you love our analysis, if you love the webinars we do, make sure to leave us a comment later on below the video when it's published, the recording when it's available. Also press a like, or obviously subscribe to our channel to make sure you will be notified whenever we are ready to launch a new webinar. Traders, be careful today. Trade small. Even if you have some trades on, you can always reduce your risk, and you can always put risk on back after the events and the price action will settle down. Okay, the markets will be here for you tomorrow as well. Traders, take care. Bye.